Lael Brainard, National Economic Council Director, joins us now exclusively. Director Brainard, good morning. Welcome.
Good morning.
You must have been thrilled to see a negative in front of the monthly CPI number. What was your reaction?
Today's report was very positive. It showed that we are convincingly on a path to achieving more normal levels of inflation. And it was good in a variety of areas. As you said, inflation actually fell slightly this month. It was flat last month. Core inflation is the lowest in 3 years on a 12-month basis, as well as on a 3-month basis. Housing showed some softening. We've been waiting to see that. And we saw price decreases now over the past year in important categories like cars and appliances, airfares, hotel stays, and even grocery prices appear to be turning the corner. So those are all positive developments, although for the president, he's going to want to see more progress on those categories that matter most for consumers like groceries and housing.
And yet, I mean, even with this very good news and the right direction that you want to see, you still have consumers that are stretched. I just spoke to the CEO of Pepsi a few minutes ago. Prices for things like Frito snacks and chips, and they're not alone, are up 35% from where they were in 2019. So it's good that those prices are still not climbing at the rate that we've seen in the last few years, but cumulatively, it's very painful and consumers are pushing back.
Absolutely, and the president is pushing back too. Look, grocery prices have got to come down, and we are seeing over the last 5 months they're flat. We're seeing large grocery chains actually lowering prices on thousands of goods, answering the president's call, responding to consumers. But some of those consumer brand companies really need to bring their prices down. They basically have seen reductions in their input costs. Their margins are up. They need to bring prices down, pass those along to American consumers.
They say that their input costs have risen more than the price they've passed along to consumers, and their operating margins are not different than where they were in 2019. So it's not necessarily the shrinkflation blame that you guys are ascribing to it.
We have looked really carefully at this. Global commodity prices have actually come down a great deal in the foods area. And of course, supply chains have been largely fixed. Margins look like they are up. They are elevated relative to historical norms. There's room for the consumer brands to pass along those savings to consumers, and we believe that they will in coming months. And we're glad to see the large grocery chains already passing along savings to consumers. It's incredibly important to working families' weekly budgets.
You worried about the cooling off in the labor market? We heard a lot from Chair Powell last week when he was in Sintra. He talked a little bit more about it on Capitol Hill this week. Unemployment rate up to 4.1% from 3.4%. What are you seeing as far as level of stress in the labor market and what's to come?
Well, we certainly are seeing inflation moving down now in a very convincing way, continuing the trend that we saw late last year through the second quarter. And the labor market has seen a lot of cooling. The labor market still is strong, so 206,000 jobs created last month, 15.7 million jobs since the president took office. And we're seeing Americans participating in the labor force at record levels, particularly for working age population. The economy does seem to be in good balance with inflation coming down. So I think the overall picture is the kind of picture that is good for Americans, leading to real income increases. That means that their wages are up by more than prices are up.